Pension credit can give you extra income each week, but the sad thing is many people who could benefit from it never actually get to claim it. The thing is, they assume that they don't qualify or they just simply don't know that it exists. So this video is going to explain exactly what pension credit is and how it works. What we're going to do is we're going to cover what pension credit actually is and who qualifies for it. We're going to explain the guaranteed credit and the income top-up system. One of the slides is also going to cover savings credit for those who reached pension age earlier. And we're going to look at how savings and income are assessed. We're also going to look at passported benefits you can unlock with a claim. And then we're going to go through how to check and to claim it. So my name's Saq Hussain and I run financialeducation.co.uk and I've got over 25 years experience of helping people with their finances. So what actually is pension credit? Well, pension credit is a benefit that tops up your weekly income. It's designed for people over state pension age on a low income. You must have reached state pension age to claim this benefit, and state pension age is 66 for both men and women. Well, it is at the minute, although that is going to change into the future. You don't need to have paid national insurance to qualify for it, and the benefit comes in two parts that work in different ways. Guaranteed credit ensures you have a minimum level of weekly income, and savings credit rewards those who saved for retirement through pensions or savings. Some people receive both parts while others will just get the one part. So around 1.4 million households receive pension credit as of the recent figures, but hundreds of thousands of people who could claim it simply don't bother applying. See, the benefit is tax-free and doesn't affect your state pension amount. You can also receive it even if you're still working part-time. So many eligible people assume they won't qualify because of their circumstances. So what this does, it stops them from even checking if they could benefit from it. The application process itself takes less time than you might think it takes to complete. And understanding how it works helps see if you could qualify, what could really be a valuable benefit to support you through your retirement. Guaranteed credit ensures you reach a minimum level of weekly income. And the minimum level is £227 and 10p a week for single people. For couples, the minimum level is £346.60 a week together. So if your income falls below these thresholds, you'll receive a top-up. You can get extra amounts added for certain responsibilities and costs. So severe disability, caring responsibilities and housing costs qualify for extra amount. Your total income from all sources is counted in the calculation. So this includes your state pension and any other pensions that you do receive. And income from jobs or self-employment also count towards your total income. Some benefits count as income, while others are completely ignored in the assessments. See, the key thing is to whether your total falls below the minimum threshold. And if it does, you'll get topped up to reach that guaranteed level. This top-up continues for as long as you remain eligible for it. Payments adjust automatically with annual uprating each April to match inflation. You see, even small top-ups are worth claiming because of what they unlock. Changes in your circumstances can affect how much you receive over time. And one of the latest slides in this presentation does look at what other benefits you can unlock. So checking your eligibility is the first step to accessing this support. The second part to pension credit is savings credit. So savings credit is an additional payment available to some older pensioners. See, you must have reached state pension age before the 6th of April 2016. People who hit pension age after that date cannot make any new claims, and savings credit remains available for existing claimants, but no new claims since then. This part rewards those who save for retirement through various means. So having income from savings or pensions makes you potentially eligible for it. You could receive savings credit on its own and without guaranteed credit, or you might receive both parts depending on your situation. And the amount that you get depends on your level of retirement provision. You see, income above a certain threshold triggers the savings credit payment for you. The threshold is different for single people compared to couples, and this credit recognises that you made efforts to provide for your retirement. It's designed to ensure savings doesn't leave you worse off financially, and many people didn't realise that they could qualify for this additional amount. So even if you're not eligible for guaranteed credit, you might still be eligible for savings credit. The rules are quite specific, so checking is the only way to see if you are eligible. And if you reached state pension age before April 2016, I'd advise you to check your eligibility carefully. The way pension credit treats savings is more generous than you might have expected. You see, savings below a certain threshold don't affect your claim at all. If you have more than that amount, there's a simple calculation applied. A small weekly income amount is deemed for each portion above the threshold. This means having savings doesn't automatically disqualify you from claiming credit. High savings reduce entitlement but don't automatically disqualify you from claiming. Another key thing is that the value of your main home is ignored in the assessment. However, if you live abroad or in a care home, different rules will apply. An income from all pensions counts, and that includes the state pension and private pensions. And if you're entitled to a pension but haven't claimed it yet, that'll be considered too. See, that unclaimed pension still counts as income in the assessment, unfortunately. And income from jobs or self-employment also get included in your total. And what you find is that some benefits count as income while others are completely ignored. So council tax support and housing benefit don't count as income at all. An adult disability payment and an attendance allowance, they're also ignored in the calculation. So what the assessment does, it looks at your actual weekly income and not your assets. So this means many people with savings or property will still qualify successfully, which is why, as I said earlier on, it's really important that you do check. One of the key benefits of getting pension credit is the range of additional benefits that it unlocks, because what you'll find is it opens doors to many other valuable benefits, and these happen automatically. So if you receive guaranteed credit, you automatically qualify for these extras. Even receiving a small amount can unlock significant additional support for you, and that could be help with NHS dental treatment, because that becomes available to you at no cost. Free NHS prescriptions save you money if you need regular medication. In England, prescriptions are free from age 60, but this does vary nationally. You'll also get help with NHS eye tests and vouchers for glasses. And cold weather payments arrive when average temperatures stay below 0 for 7 days. And help with heating costs becomes available through various schemes that exist as well. And if you're over 75, you receive a free TV licence automatically. And you might also find that council tax support could reduce your council tax bill quite significantly. And housing benefit helps with rent if you're renting your home. Help with NHS travel costs is available for hospital appointments when they're needed as well. So these benefits together can be worth more than the actual payment itself. So it can be quite a sizable sum. So this is why even small pension credit awards are worth claiming. So missing out on these extras could cost you more than just a payment itself. The application gives you access to the whole package of support. So one claim unlocks everything, so you don't need to have multiple separate applications. So how do you actually check and claim and see what you are eligible for? Well, checking your eligibility takes just a few minutes using a range of online calculators. The online calculator is on gov.uk and the Department for Work and Pensions website. When you use a calculator, you don't need to give any personal details to get an estimate, because the government calculator shows you roughly what you might receive in total. And if it looks like you could qualify, then applying is really straightforward. You can apply online through the government website really easily. Or the pension credit claim line is 0800 99 1234 if you want to do a telephone application. So call the number and they'll complete the application form for you over the phone. The applications themselves can be made by you or someone acting on your behalf. You'll need your national insurance number when you apply for it, so make sure you do have that to hand. And details of your income and pensions and any work that you're doing are also needed. Information about your savings and investments will have to be provided as well. And if you have a partner, you'll need their details too. And this is the key thing. You can apply up to 4 months before you reach pension age, and the claims themselves can be backdated for up to 3 months if you find that you're eligible. This means applying early ensures you don't lose any money that you're owed. Processing times when you do apply vary, but you should hear back with hopefully in several weeks. The changes in your circumstances should be reported as they might increase your entitlement. On this slide, we have a bunch of questions. And these questions should help you think through whether you should check your eligibility. So, is your weekly income below £227.10p if single, or £346.60 if you are a couple? Do you have any caring responsibilities or disability-related costs that increase your needs? Have you avoided checking because you own your own home or property? As I said earlier, owning your home doesn't stop you from qualifying for pension credit. Did you reach state pension age before 6th of April 2016? Could you qualify for savings credit based on when you retired? Do you have modest savings that wouldn't affect your claim at all? Have your circumstances changed recently through bereavement or illness or additional costs? Are you missing out on free prescriptions or dental care? See, these are all really important questions that you do need to think through. Likewise, could your partner qualify, even if you assumed you both can't? Would the extra income make a meaningful difference to your weekly budget? For most people, it absolutely will. And also think about whether you know someone who's older who might also benefit but hasn't claimed, because you might be able to help them make the application too. Likewise, if you've previously applied and been told you don't qualify, have things changed? Would you benefit from passport benefits like council tax? And also, just think about the wider question: is pride or stigma stopping you from claiming something that you're entitled to? So could applying take less time and effort than you've been imagining? So if the answer to any of these questions is yes, it's absolutely worth just having a look, go online and see what you might be eligible to.